You're welcome to another edition of Islamic Finance Weekly, where we bring you fresh insights and perspective on the key developments in the non-interest finance market. Recently, as part of its commitment to the development of alternative financing measures in Nigeria, the Securities and Exchange Commission issued its proposed new rules on Sharia advisory services. This is designed to provide guidance to the development of non-interest capital market products and services. How will this shape the industry? The edition will discuss repositioning Sharia advisory services for a vibrant non-interest capital market. And my guest is Mr. Akeem Oyewale, CEO, Mabuk Capital. You're welcome, sir.
Thank you very much. Thanks for having me.
All right. How will you assess the evolution of the non-interest capital market in Nigeria?
Thank you so much once again. I think the Nigerian capital market has witnessed a relatively decent growth from the non-interest aspect. We call it non-interest in Nigeria. I mean, it's called Sharia or Islamic banking in other parts of the world. Yes, today we have a couple of banks that are strictly non-interest. We have the full-fledged and we have the windows. We also have some capital market operators, asset management firms that deal largely in non-interest capital market activities, and so that is actually showing signs of growth from 0 to about 4 right now. So that's some signs of growth. We've also seen signs of growth in terms of the products that have been introduced into the non-interest capital market. The federal government of Nigeria, through its sovereign sukuk issuance programs, has issued 4 landmark series of sukuk into the Nigerian capital market. We've seen a subnational also issue a sukuk. We've seen a couple of private entities and corporations issuing sukuk as well in the private market. So we are seeing a bit of development. I mean, we've seen the first asset-backed commercial paper, that also has Islamic finance support, very murabba structure also coming to the market. So gradually, we are seeing increases in the non-interest capital markets in Nigeria. There's still a long way to go. I mean, to get to a level where the populace will feel that they have easy access, and quite some substantial volume of products they can deal with. Well, at least this is a huge progress.
All right, sir. Recently, the Securities and Exchange Commission issued a proposed new rules on Sharia advisory services. From your perspective, is this a game changer on the developing ethical products and services for the capital market?
Absolutely. I mean, the rules that were exposed recently by the Securities and Exchange Commission, the SEC, have been awaited for a long time. When you have Sharia advisors being guided by regulations, the appointment of Sharia advisors, the qualification of Sharia advisors, you are setting standards that will prevent the industry from getting into the hands of quacks. You are setting standards that will allow the market to know who to go to, to have competent Sharia advisory services. And also by the SEC issuing these rules, I mean, we hope the rules will be out soon. They are currently in an exposure format and they've received a couple of comments. I'm sure when the rules are out, it will also enhance the introduction of new products, because investors, we know that these are 1, 2, 3 people that have met the requirements of the regulator in Nigeria. So they know that any issuance they do with these people, they are actually meeting the required standards. So yes, the SEC coming out to issue these rules and exposing to the market is the right thing. The market has been waiting for it for long, and now that it's out, we hope that the final rules will also be issued very soon, and we expect significant growth in the market thereafter.
In terms of the current Nigerian capital markets master plan, how does this new rule for Sharia advisors enhance the activities of the non-interest capital markets?
Yeah, it's going to do so in many ways. I mean, like I said earlier, number one, they now have standards. So investors are very happy. They know that anybody that meets these standards and is properly assigned or regulated by the SEC to be a Sharia advisor, they can go with the person and go and sleep, knowing fully well that their products have met the required standards. That's number one. Number two, by issuing these rules as well, you now have a bit of, I would call it healthy competition, because you now have Sharia advisors that be licensed. When you are licensed, the point is you have to do something. So we expect them to be more innovative, to be able to issue new products, whether it's via many contracts, salam. What we are used to is usually ijara, but you have a number of Islamic contracts that could be brought in that will allow the market to grow. So we expect a bit of competition from the licensed or approved Sharia advisors to actually support the growth of the market in terms of bringing in new products, bringing in new contracts, convincing corporates that are sitting on the fence on the need for them to use Islamic finance as a means of raising their funds, convincing investors that want their funds to be managed on the need or the assurance that their funds will be managed in line with approved standards. So like, it's really a good thing, and we think it's going to be something that will spur the growth, of the capital markets in Nigeria, non-interest aspect in a short while.
What role do you see Islamic finance playing in the terms of capital mobilization?
A huge role. I mean, like I mentioned earlier, the Nigerian government through the DMO, Debt Management Office, they've issued 4 landmark books, and they have been able to mobilize substantial capital, in the market. The last one was a huge one, 250 billion naira, that was fully subscribed. We're expecting some couple more issuances in the near future. What the book has demonstrated in the last few years in Nigeria is that it is a veritable and verifiable way of financing infrastructure. Most of us in Nigeria have been on many roads where you've seen the signs saying, oh, financed by Sukuk 1, financed by Sukuk 2. And the quality of these roads are what people have been talking about in terms of the joy. Bridges are being built, with Sukuk funding. And the Sukuk funding structure is such that it minimizes corruption because they are usually asset-backed. So you know what you are financing. The roads to be stated in the prospectus ab initio that this is what this fund will be raised for, and this is what it's going to be utilized for. You have Sharia advisors that are going to confirm that this is what they are being used for. You have trustees. Their main role is to ensure that whatever fund you raise is utilized for that particular purpose. So because of that specificity that Islamic finance and Sukuk has brought into place, we expect further issuances to come on, and that will further enhance the growth of the market. The Nigerian pension fund industry is sitting on trillions of naira looking for homes to invest in. Most of the funds are invested in government securities. If you have good Sukuk issuances, well structured with good rentals, we expect these funds to flow in there. So capital can actually flow into a lot of the assets that are non-interest capital markets aligned. So we think that there's potential for growth in that aspect for capital formulation and capital utilization by using non-interest or Sharia compliant structures. And that is going to happen pretty soon. It's already happening. We only expect it to increase in terms of size, especially with these new rules coming from the SEC.
Recently, the IsDB President, His Excellency Mohammed Al-Jassar, visited Nigeria, where about $1.8 billion of fresh funding for the nation was announced to support infrastructure, agriculture, and other critical sectors. What do you make of the visit and opportunities for deepening partnership with IsDB?
The IsDB has been a partner for Nigeria in the last few years. The visit by the president of the IsDB recently to cement the $1.8 billion deal in Nigeria is a further testimony of the cordial relationship that Nigeria and Nigerian organizations have fostered with the IsDB. A number of Nigerian banks, non-interest Islamic banks, they've been able to get some facilities. They've been able to get capacity enhancement with the IsDB. We think that the partnership with the IsDB is already solid. It can only get better. With what has been announced, we expect a lot more states in Nigeria, a lot more corporate entities to be aware of the values and the strength that the IsDB can bring to the development of large-scale projects. They can give you long-term funding at very reasonable financing terms, and they are usually, and they are almost all the time, aligned with Islamic tenets. So what IsDB has done is to just signify to investors that they are open for business, and they think Nigeria is that kind of market that can absorb the quantum of funds that they have available. They've been supporting all parts of the world, especially their member countries. So Nigeria, as a member country of the IsDB, needs to tap into that relationship, needs to benefit from the potential financing pool that IsDB is able to give to Nigeria. We are in need of huge amounts of resources to develop our infrastructure, to develop our economy, to enhance our capacity. The IsDB has extended their hands to us. It's for us to shake their hands and be able to align with their requirements and be able to benefit, from the membership and the strength of ISDB. I think this is a good theme. I think it's something Nigeria should continue to explore. I think it's something that the non-interest financial institutions in Nigeria should continue to enhance. And I think Nigeria as a whole will benefit from this.
All right, thank you, sir. Thank you for joining our program.
Thank you so much. Thank you so much.
The growth of the non-interest capital markets in Nigeria will rely on the constant development of innovative products and services that suit the investment needs of ethical investors. This is why the new SEC proposed rule for Sharia advisory services will go a long way to strengthen the standardization and governance of activities in the non-interest capital markets. The goal is to unlock growth and new opportunities that will deepen the market and boost liquidity. That will be all for this edition of Islamic Finance Weekly. You can log on to www.proshare.co/webtv to watch our videos and read our reports. To come your way again, thank you for watching and bye for now.